Buyers broke to a new all-time high, but saw very little follow-through. So is that a red flag, or are these buyers in the clear? My name is Lamont. I've been a full-time trader for 8 years now, part of the Chart Guys team for more than half of that, where I head up our futures room and our swing report. In this video, we'll answer that question and more, hit you with some trade zones, update you on some old ones. So let's get into it. All right, so starting off with SPY here, as we were discussing in the intro, we did break to a new all-time high, and it looks like that was the highest close, I think. Let's see, 609.73, almost the highest close that the market has seen. And so is that pop and drop a bit of a red flag? You know, it's not ideal, right? You call things exactly for what they are, right? The pop and drop, new highs, not attracting new buyers. Again, not ideal. But do these buyers have anything to worry about as of right now? No, right? Because not only are we holding over this 11.7 to 14 structure, which remember, this is really what we care about, right? This is the structure that the buyers failed to hold on this FOMC reaction, right? If they were able to hold this structure here out off the back of the FOMC reaction, the market would be totally fine with just looking at backtest the structure, breakout, backtest the structure, breakout, etc. So we really primarily care about this guy, right? As long as these buyers are holding over 598.16, which we've been banging the drum about for many days now, or many weeks now, then these buyers are doing just fine. And so that is essentially what's happened here, right? Where on this session here, February 12th, you do not find acceptance within this structure. You fail to touch down on the point of control, and then now we've reached a new high. So if you recall in recent videos, what we needed to see is, all right, well, holding over this guy means the buyers are in solid defensive posture, and holding over this guy, the point of control of this all-time high supply, means that these buyers are constructive, right? They're moving value higher relative to this structure as long as they're holding over its value area high at 608.11, and they're positioned well to do so as long as they're holding over the point of control of that structure at 607.55, which is currently the case right now. Will it continue to be the case next week? Who knows, right? We have no idea, but we always know what our references are. If you have been, kind of caught on the wrong side of these trades, maybe getting too caught up in the narrative of the FUD, the news of tariffs and DeepSeek, or I think there was one more, I forget, like a CPI print that was a little hotter than, oh, that was last week. That was this last week. CPI print that came in a little hotter than expected, and you're thinking, okay, it's got to be bearish. The key is to just know where the references are, right? Like, it's really all that we have in life are references, right? Even, this is why I don't like the word confirmation, right? Like, a lot of traders talk about confirming, right? This trade has to confirm first. There's no such thing as confirmation. Any kind of obligation, any kind of promise can be broken. Any kind of contract can be breached. So, it's not a matter of just it happening once. It's not a static event, right? It's something that needs to be monitored constantly, right? You take these data points, you look at what the market does relative to your data points, and then you just carry that forward in your narrative, right? So as long as we didn't find acceptance under 598.16, there was really very little reason to be a seller. If you were a seller, like, okay, you see this gap down, you go with the gap down if it doesn't fill, and then you stop out as soon as you make that new high, that's fine, right? You want to take pot shots like that as a seller, okay. But if you really wanted to see meaningful selling, we needed acceptance under 598.16. So you got to be throwing in the towel somewhere around 598.16 at the latest if you're a seller under this level, right? So where we are relative to our references, again, lets us know what to do, right? That's just how everything works, right? Like, everything in your life is essentially analog, right? Everything that you know is analog. You compared it to something else. So anyway, it's a really good lecture by Dr. David Hofstadter from Stanford about analog being the core of cognition. It's really, really great. I know that sounds boring as hell. I promise you it's entertaining as well. He makes it like it's a very, not all of his lectures are funny, but this one I promise you is entertaining as well. It's funny. It's a not a page turner obviously because it's not a book, but it's a eye attractor, attention grab. I don't know, whatever. It's a good watch it. I suggest you watch it. Okay, so anyway, that's pretty much it. Space for a daily higher low. Anything over 598.51 is going to be good for that daily higher low. And next week, if these buyers can hold over 607.55, it's essentially also affirming this breakout, right? The breakout over this high. So this breakout over this lower high here at 608.13 is roughly the same level as the value area high. It was pretty much set right off of the value area high. So if these sellers next week can't even get back under 608.13, that's pretty much the best case scenario for two reasons. It affirms this breakout over this high, and it means that these buyers are also moving value higher relative to this prior all-time high structure. Okay, so that's really all we need to be monitoring in the near future for SPY. Excuse me, I think I'm coming down with a cold here. So this was our trade zone of old, and I still wouldn't adjust it, right? Like this one was set up all the way back here a few weeks ago, and I still wouldn't change it, right? Because this trade zone was designed around this guy, right? As long as, again, like you see how it all comes together, right? You create this narrative, you think, okay, well, as long as these sellers are not finding acceptance under this guy, then we should just stick with the buyers, right? Because that would mean the buyers are picking up or they failed over here, right? And so, okay, that's your narrative. All right, where's my trade zone? My trade zone is designed around this guy, right? And so as long, again, you give it a little bit of wiggle room because we don't expect it to hold perfectly. Sometimes it does, right? Sometimes you hold this like super perfect back test of a point of control or something like over here. Sometimes you hold a super back test of a prior high over here. Whatever, while that's nice, that is not the norm. So you always give it a little bit of wiggle room. And of course, I only see you guys once a week, so I think there's a decent amount of wiggle room in these trade zones. And that's really it. So these buyers, they should be looking to press up to monthly R1 61659. This just looks like this. It's just a little bit higher up there. R1 for the month, as long as you're holding over the pivot, which as of right now, we've already passed over the pivot. I'll hide all this. So you can see we passed over the pivot, so the objective now should be the R1. Okay, so that's pretty much it for SPY. Again, I wouldn't change that trade zone. I would just continue to use it if you don't see follow through on this, because again, that's a reasonable buy as long as you're holding over here. Okay, oops. Moving on to the Qs here. Okay, so for QQQ, recall we were watching this hourly structure, right? This little guy over here, there's not really a big amount of daily supply, so we're watching this guy. And we zoom into the hourly time frame and we can see, all right, well, what's happened, right? You got a couple of rejections from the low of this structure over here. Right, rejection, pop and drop, pop and drop, pop and drop over here. And then you'll notice that today, this Friday session, pretty much a perfect double bottom. This is all one session. So here's the 9:30 candle, here's the open. Here's the opening candle. Low of the day set pretty much right off that point of control. And then again, another low later in the session. It's not a new low, but a little bit of a higher low set pretty much right off of that level again. This is exactly why we want to look forward. We want to look forward and again, construct our narrative, right? Like we want to know, okay, if price does this, then we will do this, right? If price holds above this area of demand, then we will be a buyer above the point of control, right? If buyers can break over this all-time high supplies point of control, okay, then we're going to go with buyers as well, right? Because they're affirming the all-time high structure as demand. So anyway, that's pretty much it. I actually have something to share about that because I got an ad here. We'll talk about that later. Okay, so what do we care about next week? Primarily, it's a similar situation, right? It's just like with SPY, we care about this guy, right? This lower high that just got broken over 532.10. As long as these sellers don't find acceptance under 532.10, then this breakout from Thursday and Friday obviously is not yet negated. And the best case scenario, of course, would be to break to new highs and just continue to affirm this structure as demand. So the two key levels, super key levels next week for the QQQ, 535.67, that's the point of control of this all-time high supply, and then 532.10. Okay, if these buyers can hold over best case scenario 535.67, that's great. That means they're positioned well to move value higher relative to the all-time high supply. And if they can't, if the buyers can hold over 532.10, that's also good, right? It's not as good, right? Because obviously if you're affirming this all-time high structure as demand, that's the ideal situation. But even holding over 532.10 is okay from a defensive perspective because again, it just means we're not negating this breakout, right? And it means we'll probably continue to chip away at this all-time high supply. At least they'll be positioned well to chip away at this all-time high supply. I swear to God, this cat waits exactly for when I start doing something to start messing around. He knows, he understands that I'm distracted. And right now he is trying to climb my rope to up where it's hung because I have treats in the pocket. It's this guy. Anyway, so that's pretty much it for the Qs. And for the IWM here, the small caps, so small caps still just trading sideways, and this is also still constructive. Like it doesn't look great, right, relative to SPY and QQQ because we're not pressing at the highs. And there's a lot of relative weakness, right? So the Qs and the SPY, they broke to a new higher high on the daily time frame, whereas right now in the rut, you're still looking at a potential lower high under 230.70, right? So next week, what do these buyers care about? They care about finding acceptance over 228.90, because as of right now, what's happened is, okay, so remember, we're watching this major point of control of this structure over here. This is the structure that's like kind of, it's kind of the next objective, right? The first objective is to trade into the structure by clearing this guy. I'm talking about this big structure. So you clear this gateway structure to come into the big guy. I wonder what that was. And then this is the next structure above it. And you'll see that, it's a battle for its point of control for a few sessions, for many sessions, I should say. And then on recent history, you lower low through it, and then you do not see any follow through, pop back above. I call this a triple B setup, the bread and butter burrito setup. When you're at a major level, you balance, break down, no follow through, pop back above the supply that you just came out of. Obviously, the opposite is true if it's a buy. But if you balance, break down, pass the key level, no follow through, break back above the area that you just came down from, that's very notable, right? The sellers were unable to defend this area at all. You can look then to look for back test plays off of this guy as a buy when you see something like this. So it's basically this, right? First, major level, balance, breakdown, no follow through, big old rip above this guy, look for a back test place here, right? So that was good for you 2 times. I honestly really like this setup. It's one that I do even on the day time frame, or I used to do a lot on the day time frame. I was messing with these figurines over here. There's glass there, so if it breaks, we're going to the vet. So okay, so anyway, so what do the buyers need to get done next week? They need to hold over 221.09, which would affirm this guy as demand. Affirming this guy as demand means we're expecting more balance like this. All of this balance is technically constructive relative to this area of local demand. Okay, so next week, key level 224.58. If they can hold over 224.58, roughly the low of this supply over here, well, then they're still chipping away at this supply, and they need acceptance over 228.90 to start affirming this guy as demand, and then we'll be looking up at this all-time high supply. All right, I don't think there was a trade zone for the rut. I think I set up a sell actually, right? Set up a sell for that. Oh, right. Did we cover the Qs zone? Oh, this is pretty much at target, right? Oh, beautiful. I forgot to post about that, I guess. Well, if you use the trade zone, hopefully you're monitoring your own trades and you say, okay, we've come into the trade zone, got to the target, look to exit at least partials, walk your stop up, no later than here. It can be here as well. And I think that's fine for regarding the management. For next week, again, I would still just rock this same old zone, right? Because this zone was just designed around this structure, giving it a decent amount of wiggle room compared to SPY because they hadn't really seen that much acceptance above it, right? So we set this up on this day and, knowing that we were barely above this structure, to hold it really perfectly just seemed a little bit too optimistic. So it gave it a little bit of wiggle room, and that was that. And moving on now to the Dow. The Dow. All right, so for the Dow, just hanging out. This is honestly super healthy consolidation, right? Because if these sellers can't get back under 433.67, then all of this consolidation is technically constructive, holding over this prior area of demand. And all that's happening right now is that these buyers are bumping up against the all-time high supply. And, you could argue that these sellers are starting to edge out a little bit here, right? Because the first rip up, you got all the way to the value area high. The second move higher, you get stuffed at the point of control. And the third move, as of right now, you're stalling at the value area low. So the sellers are now making their defenses, lower and lower. But again, as long as you're holding over this guy, no big deal. So this EQ, I would still consider this pretty healthy consolidation. I really wouldn't update this trade zone either. There's a lot more volume traded down here from our original trade zone that struck out once here, struck out twice here. And I think, you kind of want to stick to using this area just as like a last ditch area, just because there's just much more volume traded there. So I would leave this exactly like this as is as well. No change to this guy. All right. Moving on to the dollar. So this is pretty notable, right? The dollar pop and drop at the next area of supply over this massive area of demand. This demand was created over like 2 years or so. And so to pop and drop and then come back into it is a bit of a red flag. this trade zone, which already shook out once, came into it over here. This was just an ad for this anyway, but came into it here, shook out again. I still think this is very reasonable, right? Because you could very easily get some back and forth trade here. And the idea is as long as we're holding over this guy, then we don't come into this. And so the test is really coming up soon. The point of control of this structure is at 106.335. So next week, if these buyers can prevent acceptance under 106.335, it's pretty much the best case scenario, and we should expect further balance just like this. Okay. So again, no change to this dollar situation. NVDA, so this one, another, trade zone, came into our trade zone once over here, got to the target, and now came way deeper into our trade zone, and again, is flirting with the target. I tweeted out, you probably want to look to take some partials out before the weekend is over, somewhere around this high volume area, just because, again, the weekend is here and you're so close to your target, it would be a shame to like give back too much. So anyway, that was my recommendation. If you did that, you can leave your stop under here and then wait for a little bit of structure to be created. Basically, we want to see if these buyers can continue to hold over this guy, right? This is the structure that was maintaining price, all these lows over here for this kind of sideways trade. And then obviously it became reactive over here. Sellers were using it to defend against buyers, and now you'll notice that this higher low was set pretty much right off of the value area high of this structure, which means that buyers are again moving value higher or relative to this guy, right? We're putting in more volume higher relative to the value area of this fellow over here. So this is like, honestly, looks very healthy still, right? Because if these sellers were going to mean business here, they would have wanted to press under here, because pressing under here means that we don't come into all of this supply, right? This is a lot of meaningful supply that these buyers have cut right through again. So, and again, this was like that DeepSeek news reaction, which I don't understand why it would be bad. I just don't understand why it would be bad. It just doesn't make any sense why that DeepSeek news would be bearish for NVDA. It makes no sense, right? If these people were able to create similar competitive large language models with, less advanced chips, right? Sanctioned chips or whatever. That just means that the more advanced chips can do more, right? And it also lowers the barrier of entry, right? Such that more people are going, like, you got a guy running like a Raspberry, like DeepSeek on a Raspberry Pi. All of a sudden now, you know who else uses Raspberry Pis? Students, right? High school students, when they build like, their little projects or whatever for like their battle robots or whatever, right? Whatever they're doing for their, electrical engineering labs and whatnot. High school students theoretically now have access to large language models, powerful large language models, competitive, comparable to like GPT-4 or whatever, right? Whatever the heck DeepSeek was comparable to. That's why, that just means that there's likely going to be more demand, right? There's going to be AI, there's going to be more AI systems being used by more different groups of people, right? Which should increase the overall market. You know what I mean? You lower the barrier of entry, it allows everybody to have it, then okay, well, then overall the market should grow, right? So anyway, again, we've talked about this before, right? It's very similar to like the proliferation of cell phones, and like the books, engines, electricity, right? These things all used to be for the wealthiest, right? The elites of and whatnot, and when that was the case, yeah, the technology was amazing. It did some amazing things, but because nobody could really afford it, the market was very small, right? But then once you lower the barrier of entry, the market blows up because now everybody can get a taste, and they just want a taste. So anyway, that's pretty much it for NVDA. I think this is super healthy. I would continue to use this trade zone. I was hoping that we would actually see more fear so that we could potentially get a play off of this key structure, but maybe that's just not in the cards. I don't know. I'm very content with, my current NVDA position, but obviously I'm always interested in buying more. And I do just DCA into it as well. Like, I don't just trade. I'm also an investor. I highly recommend that, especially if we're trying to capture the AI wave. It's projected to grow like tenfold or something like that in the next decade or whatever. I kind of feel like that's a lowball estimate, but we shall see. So moving on to Bitcoin here, and so for Bitcoin, again, no changes to these trade zones. For these guys, we're just doing the exact same thing. Again, you just you create the narrative and then you just do exactly what what your narrative suggests until the narrative is broken, right? And so the current narrative right now that we're working with is, all right, well, all of this consolidation is healthy as long as we're holding over this guy. And that's not our opinion, right? The market has told us this, right? These are just facts. If we are holding over a prior area of demand, well, then it must be constructive, right? If we're under supply, then it must be constructive for sellers, right? So as long as we're holding over this guy, all of this sideways trade is totally chill. Just like as long as we're holding over this area, all of this sideways trade was totally chill. So that's really it. And again, I'm watching the developing point of control as well. So this is notable, right? So as of right now, these buyers are struggling to get back over the developing point of control of this local daily range. It's not the best look, right? Ideally for these buyers, they'll break back over 98,400 or so, find acceptance above, and then they'll be positioned well for a potential breakout again. But just because the sellers are edging out in this local balance, it doesn't mean that the buyers are down and out, right? Because again, it's all about this guy. So this is kind of like a back and forth fight between buyers and sellers. This is like round 3 though, right? And the buyers have already won 2 rounds, So even if the sellers are advancing here, okay, maybe they win this 3rd round and then we go into the championship rounds. I'm assuming, UFC rules, obviously there's different rule sets, but let's say you go into the championship rounds, okay, rounds 4 and 5 are about this big guy, right? Whether or not these buyers can hold over this big guy, right? So that's, I think that's a okay analogy if you're a fight fan. Anyway, so that's pretty much it for Bitcoin. And then for Ethereum here, so I think we were talking about like, okay, yes, we got popped out of our official trade zone, which is now gone, but we got popped out of it because it was like under here for the stop. But as long as you're finding acceptance over this point of control at 2570.27, it's very reasonable to be looking for buys at least up to 2814.12. So I don't have it drawn out, but that is not bad R where you just look for the pass back overplay and you target the value area high. That would be a stop out over here. So you buy this pass back over. You're looking to get to the value area high on this one over here. It's a stop out, is what it is. You look for that same exact context, buy that pass back over. You do get it this time. And the R on this is pretty sick, right? First of all, the R on this, the risk on this is nothing, right? Let's say you got like really bad fill, a terrible fill. You're just really bad at this. You're still 1.4%, like giving it a little bit of wiggle room, right? Let's say you get a terrible fill on this guy. Stop is under the low, trying to get to the value area high here. That's a 3R trade. So, and you're only risking 2.79 points, rough estimate. So anyway, I think this is not great, right? Because you have a lot of supply over here. Ethereum, to me, we're just looking at more of this, right? Like it would have been ideal for these buyers to hold over this demand zone. That would have kept them positioned better for another rotation to the highs of this range. But it's kind of similar, right? Holding over this guy over here is what made these lows, right? This low, this low, this low, this low, this low, more or less, and this low, more or less. So we're just back to watching this guy and then watching the structure that's been containing price throughout all this balance, this guy, right? So I don't hate buys, down in this area, the lower third or so of this balance, and then just target the other side. I don't really hate that. So a new trade zone for Ethereum, something like this, I think is pretty reasonable. So even if we were to take out this low, get under this point of control, at this point now, we're probably just looking at, again, using this guy as our key reference, right? So something like this for Ethereum is very reasonable. IMO. All right, moving on to URA. So URA is still just grinding this guy. And so if we're going to take a lesson out of that Ethereum situation, then it would be to not take trade here, right? Because really the big structure, all of this is being contained by this guy, not the all-time high, but this structure over here, this supply over here. And then it's really this guy that's made these lows over here and this low over here. So, if we really wanted to be conservative, you would just wait down here, right? Instead of looking for that aggressive play over here. Instead of looking for the aggressive play in here, which actually already shook out kind of okay. Like this definitely would have given you enough opportunity to chop it up and then walk your stop up, and then worst case scenario, you get taken out of it. It's fine. For like a chop and stop situation, it'd still be profitable at least. Anyway, so I think down here is probably better, right? If we're going to take a lesson out of the Ethereum situation, I think probably in here is where we should be more interested in looking for buys, and then we're just looking for this kind of price action to continue to shake out. Okay. Something like that. I think very reasonable setup for URA. Okay, so that is it. For show and tell, I told you guys I've been working on trying to add to trades as I go, and it's really not going that great, to be honest with you. Like, I had some decent success on Thursday and Friday, but at the same time, I'm kind of moving away from the goal, right? Like, the goal is to kind of just keep adding up to targets. So there's some good, there's some bad. I'm gonna walk you through it because I got a lot of nice comments from old subscribers and some new folks. Old subscribers, Rich has left us, that jerk, but he still watches these videos apparently. So he was letting me know, hey, listen, it's nice that you're working through this new system publicly. So let me just do a little quick and dirty review here. I guess it doesn't have to be dirty, but we'll do some review real quick. Hang on a second here. I got cards over here. All right, so let me just set up the context first. And I honestly think, I don't know, like I think I mean, I'm very biased, right? And I just feel like this is just one of the best ways to trade. Like, that's my honest opinion. I think this is one of the best setups. It's what I call it. I call it the affirmation setup. I mean, technically all my setups are affirmation setups, but this is like the second day affirmation setup. So what you want to see is you want to see one session do a thing that's meaningful, right? Test the key level and hold it, and then on the next day you look for a session to session setup, right? And so that actually ended up shaking out really well on Thursday because, excuse me, my throat is killing me here. It's gonna double fist some liquids. Please don't make anything with deep fakes. Okay, so anyway, so here we have this hold of this key structure, right? Again, we're building our narrative, right? We already had this trade zone set up. We're already looking at it like this. We know, okay, as long as we're holding over this guy, then buys are reasonable, right? And so what does it mean to hold over this guy? We have to hold over its point of control, right? That's the key level that we care about. So notable failure to not touch down on it. And then again, a very notable failure to not touch down on it here. So on this day, the gap down, that's the CPI gap down, I believe, and the sellers were so close to testing the point of control of this structure, and they failed again. So that's two failures, and then a close near the high of the day. And we never set this daily high or low here, right? So this is also potentially a daily high or low that's waiting to be set here, right? So the next day, you get pretty much the most ideal situation, a gap up open. Why is that the ideal situation? Because, well, if this session is going to be affirmed, right? If the hold of this level is going to be affirmed on this day, what needs to happen, right? Of course, we need to hold over the prior session, right? And ideally, we'll hold over the entirety of it, which is exactly what's happened, right? Well, more or less, where you get very, very little fill. I mean, you get very little, the sellers gain very little ground beyond the regular trading hour size. So they fill it and then a little bit more, and then that was pretty much it. So I'm gonna walk you through all of the action, all the activity. So let's see, on February 13th, I bought NQ. It's right off of the open. And so the open looks like this. So that the daily context we've already covered. So that should be fine. And then so on the, here we go. So here's the open. And again, this is a gap up open. So gap rules would suggest that you go with gaps that don't fill right away, right? So you get this little, barely a move down and then no follow through. So I just bought that pass back over the open. I think that was very reasonable play. And then I just chopped it up at the overnight high. The overnight high, I forget where it was. Hang on a second here. The overnight high was just right here. So roughly where this line is, that's the overnight high right there. So you buy that open. It's over here. You buy this open, better than a 2R chop here. I mean, better than a 1R chop, way better than a 1R chop here. And then you stop out the rest over here because, all right, well, you made a new low, right? So is what it is, no problem. So chopped under the ONH, and then I stopped the NQ at 939. And then at 9:43, just a few minutes later, I buy the Depop passover, right? So I buy this Depop passover over here. This pass back over here. Why? It's a very, very similar concept, right? Very similar concept to what we were talking about over here. Because, all right, what's happened over here? The sellers didn't get the job done. So if the sellers didn't get the job done, we're going to join the buyers, right? It's the same concept. what is the goal for the sellers? The seller's goal is to get back under the regular trading hours high of the prior session. So if that's all that you're going to go into the prior session, and then you're going to hold over the Depop again, these buyers are doing just fine, right? The day plus buyers are still in control as long as you're holding over yesterday's regular trading hours high. So I just buy that, pass, back over the Depop. I do not remember where the chop is. I took a pretty close chop, 883, because at that point things were looking a bit sketchier. 883 was just where there was some 30-second two-way trade here, and that was it. So I gotta go into the 30-second, I guess, to if you really want to see it here. So there was just this little bit of two-way trade here at 883, this little overlap over here. So if I buy that Depop, stop is under this low, I chop it up over here, slightly better than 1R. It was not a perfect Depop pass. It was something like this, looking for get to 883. And so 1.5R, worst case scenario, I'm still walking away with something. So this attempt, a chop and stop, you walk away with some points, pretty nice. This attempt, a chop and stop, if it gets stopped out, you walk away with more points. These attempts are pretty good. So it's kind of going against my original plan. My original plan was just to keep adding to the trade. But I realized, you know, like, why am I moving away from a system that has served me so well? So now I'm trying to implement a little bit more of my old system. I want to start with at least 2 contracts, get my risk out of the equation, and then if we continue to see follow through, I'll reload again another 2 contracts, chop that up, and then try to hold 2 going forward, etc., etc. And again, I didn't do that in a good way. The trades I took were good. The management, I think I still have some, you know, room to grow. I mean, I definitely have a lot of room to stretch into, because, you know, I ended up kind of just coming into the trades and then coming out of the ads, because I was really just looking to play to here. So I was hoping that I could get more ads before getting in there, but I really only got 1 ad, which we didn't even talk about yet. So look for 883, waiting for a potential. Okay, so after that, an hour later or so, I'm waiting for the potential 15-minute higher low for an ad on NQ, and I wouldn't be surprised with a chop around Depop later for it rather than a clean one. So I need to see a failure to touch down on the developing value area low. Okay, and that's at 10:30. And this is something that I think is really key, right? In trading, you know, with anything, right? You kind of want to look through, it's kind of like what do you call it? Like a QB field of vision, right? You want to look at everything, right? Well, one of Lori's ex-husbands was an NFL quarterback, and he calls it, man, I forget now. I think it was field of vision. I forget, but either way, basically he's like, you never look down when you're the QB. You just keep looking through at all of your receivers, right? Because the moment you look down, everybody's in a different spot. You're not going to be able to orient, right? So you kind of want to look through the entire process, think through all these different options, right? So if you do stop out, how would you re-enter, for example? Or if you're looking for an ad later, how exactly would you do it? Lay it out now. If you are in the habit of making decisions on the fly, especially for the day time frame stuff, you're probably often frustrated, right? So don't do that, right? A real huge key to trading is just creating the game plan and then sticking to it. Whether or not that game plan shakes out, which in the beginning it's not going to a lot of the time, that part doesn't matter, right? The part that matters is that you create the plan and you stick to it over and over and over again, so that you can get these reps in, you get this experience, and then you have a good frame of reference, right? But if you're always making decisions off the fly, there's no systematic approach to what you're doing, you can't control for any variability, and you never really know what part of your process is good, what part of your process is not. And then if you don't have that, you can never really be confident in your process. If you can't really be confident in your process, well, you know, what are you even doing here? You know, you're never going to trade effectively if you can't be confident in the process, right? Which means being able to ride drawdown, knowing that that's just part of trading. Anyway, so looking ahead at this point at 10:25, I want to see no touchdown on the developing value area low, and then I'll look for a Depop passover. So at 145, let's see, at 145 on this session, 145 is, let's see. So we see that follow through. I'm waiting for 15-minute retracement. We see 15-minute retracement. Hang on. Where is it? Okay, so at 115, we're over here. No, we're over here. What the heck? 115. That's weird. Hang on, am I on the wrong day? Add Depop pass, stop under for add under 145, excuse me. Okay, so 145, we're over here, right? And so here's where I decide, okay, no, it's over here. This first pass back over the Depop after we see some consolidation, so we don't touch down on the developing value area low. 15-minute retracement is now underway. And so I just buy this pass back over here. Why didn't I do this one? Because the risk was freaking huge. I'm not going to risk 86 points on an ad, right? So I just decide, you know what? If it shakes out here, I'm just not going to do it here. The risk on this was actually still pretty big, 40 points, but much more reasonable. And we made a higher low compared to this low. And again, we did not touch the developing value area low, which is the setup that I was looking for, right? So we buy that pass over the debug, and I say, all right, well, I'm looking for a diva exit. The diva exit is slightly better than 1R for the ad. And then at 204, we do get that diva exit over here. So here's the developing value area high. And again, that's like roughly, it's slightly better than 1.5. I forget what it was. Oh, just kidding. It was only 1.2. Either way, we get that diva exit. So again, this situation now, we chop up half, and there's no way that this can go against us now. We'll get paid for this attempt either way. Great. This is like kind of implementing my old style, not just adding it as I go. And I'm just kind of fine tuning it, right? I want to see where I can find some success, and then I'll just keep making adjustments. I don't want to force anything. For a while, I was forcing it, trying to trade in a manner that I've never traded before. I didn't really do it very successfully. I haven't proven it to myself, and it was very, very different. And I think that was probably just too much change at one time. Anyway, so I chopped it, and then I walked the stop for everything under the hourly higher low, and then I walked the stop for the ad to under a high volume node at 328. And that was just, we already broke out to here. And so I just walked the stop for the ad to under this high volume node over here. And then I'll exit the ad if we test 535.63. And 535.63, again, was just this, oh, I guess it's a little off now, but was just this point of control of this hourly structure over here. Sometimes I like move these things by accident just because like you're clicking around or whatever. But I'm honestly not sure if 67 is better. Maybe I actually just fixed it. That looks spot on. Oh no, actually, it actually looks a little bit. Yeah, it looks spot on. So maybe I just changed it. I don't know. Either way, that's all that I was really looking to play up to. That was my target, and I was hoping to get more ads on the way up. You know, you look at a day like this, and you think that you could get more ads, but for my setups, that was the only one that was appropriate for me. I guess I could have played a diva ad here, but I didn't. Again, I'm still working through this new process, so you know, it's not going to be perfect. It's never going to be perfect, but it's going to be way less perfect while I'm obviously working through it. Okay, so that was pretty much it for that session. And then the next session, I had the morning stream on Fridays. And so, and really the setup really wasn't that great anyway, in my opinion, for like to add right off of the open. I wasn't terribly interested in that. But during the live stream, and I guess I could try to find it and clip it into the end of this video. I don't know. It's like, it's such a long stream, and I always forget what I say and when. So, and I guess very often I'm like saying the same thing. So it like kind of just all becomes one big thing in my mind. But if I can find it, I'll throw it in the end of this video. But basically what I was saying was, okay, well, all of this price action today, right? It's constructive as long as we're holding over all of this balance over here, right? So here is yesterday's balance. And as long as we're holding over the value area high, then value is obviously moving higher. And if we don't come into this guy, then you don't even negate this breakout. So I was thinking, all right, well, later in the session, there is, you know, the potential that you can look for a developing value area low play. But for me, I wanted to see some hourly retracement first. I wanted to see, all right, let us hourly retrace, begin, and I just mean regular trading hours only, although I think in this case it was the same thing. So I just wanted to see some hourly retracement begin, which is what occurred over here on this candle. And then as soon as that candle occurred, all right, let's consider the narrative again, right? Let's put this all together, right? We know, okay, well, as long as we're trading sideways above all of this sideways, then we're doing just fine. And for the first half of the morning, what are we doing? We're just balancing. But we're balancing over another area of demand, which means that this balance is constructive for buyers, right? As long as we're balancing over this guy, that means that these higher prices relative to this structure are being accepted, and we're balancing. And so what do we do? What kind of trade do we do when we're balancing? It's no different than, you know, it's no different than the dollar trade, right? This is a balance trade, right? Responsive trade at the extremes of the range, right? Just like that. What was the oil idea? The oil idea was just responsive trade, right? At the bottom of the range, looking for more price action like this. You know, it's the same exact concept, right? So what should happen when you're seeing balance is you should see a lack of acceptance above the developing value area high. You should see a lack of acceptance below the developing value area low. So if you look at this session and we come back into the daily, the low time frame chart, this is what was happening. So I'm streaming throughout all of this. So I'm not really too interested in doing anything. I don't want to be distracted and trade. And very often when I trade on the stream, it turns into like a 3 hour stream. I'm just, I don't know. It's very tiring, and I'm like multitasking, and it just doesn't. It's not as smooth. Things are usually. I'll still do it, like I still do it, but it's not as smooth as I would like it to be. So I'm just being patient here, and I didn't really love the context for it because we were bumped. We had already gotten to my target. So, but that being said, remember what we were talking about regarding the point of control of this guy, right? As long as we're holding over 535.67, then this guy is still being affirmed. And again, we have this like pretty perfect double bottom, practically a perfect double bottom here. So we're balancing over the prior session's balance area that's over here, and we've held a back test of the all-time high structure's point of control. So to bottom fish a balance play here is technically like a very directional play. Yes, it's technically responsive trade, a balanced play, but you're going with the bigger picture momentum, right? Because everything is constructive. You're constructive on the daily, you're constructive on the 15-minute from session to session. Okay, we're gonna go with the buyers here, right? So at 12:35, I say, all right, buy the pass back over the open, and shout out to Storm. Storm actually bought the pass back over the developing value area low because he's a superior trader to me, and everyone knows that. But his wife is in love with me. You win some, you lose some, right? It's all about give and take. So I bought this pass back over the open over here, and he bought the pass back over the developing value area, saved himself like 5 points or so, again, making him a superior trader. And so that's his real name, by the way, Storm. It's not a nickname. That's his actual name. So if you want to meet him, join our community. He's pretty cool guy. Plays studio guitar, whatever. It's like he's practically famous. So anyways, so I bought at 12:35. I bought the NQ pass over the stop over the low of the day, and I'm just looking for the diva exit over here. Right? Again, it's this. All of my trades rhyme. Every single one of my trades rhyme. Like once you discover edge, right, there's no good reason to deviate from that edge, right? Going forward, probably most things that you do in the future are going to be somewhat related to something that you've already found success in, So very similar setup. I buy this pass back over the open, and I'm looking to get to the other side of value because this is just balance, right? This is what balance looks like. You don't find acceptance over the deval, you come test the deval, no acceptance over the deval, you test the deval, no acceptance over the deval, no acceptance on the deval, no acceptance over the deval, no acceptance over the deval, etc., right? And at this point now, hourly retracement had begun. So if I buy this pass back over the open here, it's very reasonable to be looking for an exit at the diva or the ONH. I wanted to be a bit conservative and look for the diva exit because we had already failed to get to the diva a few times here, so I wasn't too confident in this, to be completely honest, but that's the edge, and that's what I was looking out for. I called this trade out during the morning live stream, and you set the plan and you just do it. If it doesn't work, it doesn't work. It doesn't matter if it doesn't work. One single trade does not matter. I promise you. FOMO or worrying about being wrong, these are all the enemies of the trader. There's really no reason to fear missing out because you're missing out on literally the vast majority of opportunity at any moment anyway. So what is one more thing that you miss? Who cares, right? And then regarding losing, well, you got to crack a few eggs, right? There's no way for you to be a professional trader and not lose. You got to be a good loser, right? As Tom Hogarth says, the best losers win, right? So you got to really fix your relationship with losing, which is honestly one of the hardest things for me personally. Anyway, so I got the diva chop, and it was like slightly just under 2R. And then at the end of the day, I just exited again because I didn't really want to hold over the weekend with all the headline risk or whatever. And then I still have the original, so it's not perfect, right? I don't have this system where I'm like continuing to add as I go, but I'm also not so sure that that's the best system for me anyway. And making this kind of switch right now, I'm still kind of practicing adding to the trade as it works. And, maybe I'm being too much of a pansy, but this was a monster trade. So, pros and cons, right? I'm still evaluating this system. I'm still working it, still testing it. So, I'll probably go live in maybe end of March, if all of this goes well. So anyway, that's pretty much it. That is really it. I also really want to just give a quick shout out to David. If you've made it this long, 43 minutes, thank y'all. But David's so cool. He's our resident raccoon. And every night, more or less, more consistently lately, he's been posting his analysis, including market profile, and he looks at rates and fundamental analysis and stuff. And I appreciate that. He's a very helpful fella, and it's nice to get some different perspective. If you look at our futures room, it looks quite sleepy on the surface, just a few like, regular posts or whatever. But you click into the chaos thread, and shit gets wild. So if you're interested in joining a group of traders like us, hanging out with us, figuring out how to trade just like this, using these lit levels that I share with you on the weekends, to do day time frame stuff where you can get really asymmetrical, give us a shot. Links in the description below. If you're interested in the swing report, which is just 2 novel trade ideas shared to you guys every single week. I don't trade every single one of those ideas, but I'm always keeping them in rotation. I'm always scouting them. And when I do trade any of those ideas, I do live updates for all of them. So if you want to learn the ropes, get a feel for it, or if you just want some support, if you're a swing trader and you're just looking for some trade ideas and you're very comfortable with operating your own system, then give the swing report a shot as well. Links in the description below. Otherwise, I appreciate you guys tuning in. Happy Valentine's Day to y'all. It's actually over, but yeah, appreciate y'all tuning in. Thanks for sharing some of your time and energy with me. Hope you enjoy the rest of your weekend, and I hope to see y'all soon. Farewell.